So today in this video, I want to show you how I use the 50 exponential moving average to identify opportunity in the market. I want to show you it because it's a very simple tool. It's not complex. It's very effective when using properly. And I'm going to show you how I use the 50 aligned with the critical levels and how I use this to identify market information objectively. It keeps me from making bad decisions in the market, and it really helps keep me centered and focused. Right, so the day we're going to be talking about is 11/21/2024, and I'm going to show you guys once again how I use this tool to effectively get in and out of the market. So to really use this properly, you're going to have to first identify your critical levels. Your critical levels are your previous day pin numbers, right? This is your previous day high, previous day close, and previous day low, right? So if you look at this chart right now, I have 3 critical levels mapped out. Very simple levels to identify. These are the levels I play off every single day. The previous day high, which is the highest price from the previous day. The previous day close, better known as end of day, right? This is a critical level with tons of volume. You have to watch it. And then previous day low. Each one of these levels is very significant. Why? Because they played a major role in price action. This was the lowest price from the previous day, meaning there was a lot of buyers here. Sellers can only push price this far. On the flip side, this is the highest price from the previous day. Buyers could only push price this high. And then right here was the close. This is where the last print of the day went. This is where mega amounts of volume went into. All 3 of these levels have tons of volume. Also, previous day open print, that's a very good level as well. Right, these are the pit numbers, the critical levels. These levels hold massive amounts of volume, and if you can learn to understand what's happening at these levels, you're going to have a massive edge. Right, so I map these every single day. So now you're going to watch price open. Right, price opens way above it. Right, so when price opens way above it like this is what we call a gap up. Right, now a lot of people call it a lot of different things. It really doesn't matter what it's called. What matters is your understanding of what you're seeing. There's a lot of liquidity in between the market open and the previous market close. Right, this is the gap fill. You're going to notice price sucks all the way back down to previous day close and previous day high, closing the gap. Right, and now what happens at this level going forward is going to be very beneficial to you, as long as you could understand what you're looking at. This is where I use the 50 exponential moving average, and a lot of traders ask me which time frame I use. I use it on all time frames. Once again, it is a tool to understand market information objectively. It's not a perfect indicator telling you when to go long or short. It's a tool. If you guys can start to understand that concept, you're going to view the market information in a way more profitable standpoint, right? No indicator is just a buy or sell tool, right? You need to use indicators to understand the market story. The buy or sell tool is up here in your mind when you're understanding the market information appropriately, right? That is how you're going to be able to make effective decisions in the market, right? There is no tool under the sun that is going to guarantee profitability on a buy or sell alert level. It's just not how it works. Instead, use your indicators to understand market information and then make your decisions, right? In a more flow state manner, right? Instead of just binary, oh, this happened so I have to go long, or this happened so I need to go short, right? No, you need to understand what the story's telling you, right? This is why I use these levels, and this is why I use moving averages. Right, so price falls way below this level. When I'm watching price action here, my edge is not present. Right, there's really nowhere for me to get in the market. There's nowhere for me to appropriately identify risk. So I'm going to flip back to that 5-minute, right, and then we're going to take a deeper look into what we were viewing. So as price is selling off very quickly, I'm noticing a few things here. There's a gap in between price in my moving average, right? I have the 9D EMA up, and I have the 50 up, and then I have the EMA cloud, right? We're very extended, and anytime we're extended, these are unhealthy trends that I do not want to trade continuations with, right? Instead, I'm going to be expecting more of a pullback into these moving averages, into my critical levels, and then I'll make my decision, right? This is once again why I love using these tools these this way. They keep me from chasing, right? I will not chase the market when there's extensions. It's that simple. So therefore, I say sitting on my hands, viewing market information appropriately, right? Price rips into the 50 and we start to get some selling. Now, there's still, my edge is not present here. Yes, we are coming into the EMA cloud, we are coming into the 50, and we are starting to get a rejection candle, but there's still not enough information here for me to actually pull a trigger and to get in a trade, right? So for all of you that know, my edge consists of a critical level, a moving average cross, right? And then a green bar ignored or a red bar ignored, right? That's my entry criteria. Either on the 2 or 5 minute, and right here there is none, right? So price is just ripping into that. There's no entry criteria, therefore no trade. So then price comes back down to the lows and then rips right back up into our 50 EMA in our EMA cloud. Now we're also coming into previous day high and previous day close. So now my edge is starting to appear, right? The trend has been defined, right? We fell below the 50 EMA in the morning. Now we're coming up to our critical levels and we're getting some play, right? Price action is starting to reject the 50. We have a nice red candle here at our critical levels. Now this is starting to make a little bit more sense, right? So in this scenario, I'm going to start looking for a short play to target pre-market low, right? This is what I'm looking for. Now I will drop to the 2-minute time frame, right? So once again, I identify the setup on the 5 minute. Now I'm going to drop to the 2 minute. And I'm going to be like, okay, get a more surgical, precise view of what price action is doing, right? So now I'm going, okay, we have a red bar rejecting the 50. We're coming up into previous day high, previous day close. Now I need my entry criteria, right? What's my entry criteria? I need this green bar to be ignored or disrespected for me to enter the market short, targeting low of day, targeting pre-market low, right? So that is my trade plan. That's what I'm looking for. And then bam, we get the beautiful red candle that wipes out the bottom of the green candle, right? Signaling that the green candle has been disrespected, it's been ignored. The buyers that were there just got smoked. So at this point, I'm going to enter the market short right here. My stop is going to be above the red candle. Notice how we're using the critical levels. Notice how we're using the 50 exponential. And notice how we're using the green bar getting ignored, our entry criteria, to get in the market short and target previous day low, right? So this was a super simple, effective way to identify market information in a profitable fashion, right? So real quick, let's just go over what it was that we used. We used the critical levels, right? We had previous day high, previous day close. We used the moving averages, right? We used the 50 exponential, pretty heavy here, right? Notice buyers cannot get price above the 50. Every time price ripped into it, we got a rejection. We got a rejection. That's signaling strength, right? And it's like, I remember I used to think about this, and I would be like, what about the 50, right? Why is it like who out there is just putting sell orders in every time the market reaches the 50 exponential, right? Like who's doing that? And it's not that somebody's doing that. It's that price moves in a structured way amongst all the chaos that the market orders, right? So we need to find ways to measure it. We need to find ways to understand it. The market is literally chaotic price action constantly, but you can use these tools to give it order, right? You can use these principles to give it meaning. And then you can understand these strategies to give yourself profitability, right? If you can learn to approach the market in a fashion that's repeatable and then learn to digest the story in a manner that helps you understand it, then you'll be able to pull triggers on trades way more confidently. And that's exactly what we did here, right? We used previous day high, we used previous day close, we used the 50 exponential, and then we identified opportunity with our red bar that was completely ignored, or I'm sorry, our green bar that was completely ignored there on the 2-minute time frame. Right? So very simple trade, not complex, very simple, very effective. It doesn't need to be complex, right? Once again, guys, like if you guys take anything from my YouTube channel and all the lessons that I've made, let it be, it's up to you to define a repeatable approach that helps you gain context over the market that you're viewing in an objective manner. Using these tools to react to price action instead of predict it. That is what has really helped me, and that's what I want to give to you, right? So I hope you guys like this video. Make sure you hit a like, send it to somebody that needs it. And if you guys want to get involved and join my army, click the links below. I'll see you in the next lesson.